Hello, this is Dr. Lawrence Jones of FARME Institute with an update to Federal Milk Marketing Order 33, and I'm recording this on March 30th, 2023. And this is brought to you by Nobis Agri Science in connection with Balchem. Now, it's been a very interesting week on the futures market. So some of the data I'm going to present to you is just a little bit old, but I want to make sure that I get you at least the most current data I can. And so I want to start with looking at the 50-50 blend milk price out for the next 12 months as it compares to, history. And so for 2022, we had a blend price of $23.22. And right now for 2023, next year, it looks like about an $18.99. So when you're doing budgets, you probably ought to calculate about $4 and a quarter lower than what you had for last year. And if we look at how this is kind of coming together on the futures market, again, this is just slightly old. This was on Friday. I always do these as weekend numbers. So the red line here suggests that the contracts were actually down last week on the base milk price, and here are low values. So we're down here at the very low that we've had, and we're way off of the highs that we had. But you can see that it's going to come up a little bit right here. It's probably upward trend through most of the summer and into the fall. But again, that's how we end up with that 4 1/4 lower than last year. So your statistical uniform price for the milk checks you guys just got just came out, and the statistical uniform price at Cleveland was $19.52, and then you're going to have a location adjustment for wherever you happen to be, and that is $1.30 lower than it was last month. I drew this line in here, just kind of a benchmark as to where we've been historically, 2019, 2020, until we started this run up. And I actually consider that run up largely to be a war premium with Ukraine, and everybody was still recovering from supply chain. But we're fast approaching this number down here, and we've had just this downward trend on milk prices here for quite a while. So you had 1952. Here's how the rest of the country came together. And one of the things when I meet with you guys in April, I want to go over as to why would the Northeast have that much higher of a milk price. And at the end of the day, the farmers don't get any more money than what you guys get. So again, the Northeast was 20.75. Florida was around 25. The Southeast is always high with a high class one utilization, but everybody was in that high 18, low 19s kind of numbers. And you dropped about $1.30, and part of that is how the different classes came together. Class 1 came down $1.63, Class 3 came down $1.65, Class 4 $1.15. Here are your distribution of milk, and again, there's a little bit more to calculating how the uniform price changes than just this, but again, at the end of the day, we're about $1.30 lower. Because one of the things that we want to talk about is depooling, and so till now most regions have been depooling class 4. We're going to see that that's going to change, but you guys increased your class 4 utilization by 4.6, and so what happens is this month you had 13.4, but if we go back and look at last month you were 8.9. And so it looks like you're done depooling class 4, and I'll show you that graph in a second. But part of what happened in your milk prices is the fact that you came up in class 4 utilization. And this is the utilization for order 33 clear back to 2019. And you can see that you're one of the orders that depools quite a bit. And if we just kind of throw in this number here to suggest that up here you're probably depooling class 3, down here you're depooling class 4. So now you're coming back to kind of neutral, and probably is, on average right now with very little depooling this last month. And one of the things I want to talk about in April is what depooling does to actually a milk check. If you're in a co-op that's depooling, it's probably a good thing. But if you're in a co-op right next door that does not depool or doesn't have the ability to depool, it's really a bad thing. But we'll get into that in a little bit more detail. So if we look at kind of where it's going to happen in the future, this is the class 3, class 4 graphs for the next 12 months. Again, this is as of Friday. And you can see class 3 is quite a bit higher than class 4. And that really changed from last month, by the way. But what we need to do is calculate the difference between the two. And so for a while here, probably April and May, class 3 is going to be more than 75 cents higher than class 4. So there's a good chance your region is going to depool. So you're probably going to see less than 45% class 3 in this in April milk check. So if we look at what the order did for fat percentage, still very good, 4.13 a year ago, you were 4.13, and it's been, just an upward trend since, somewhere in 2019. Same thing for protein, but you actually dropped a little bit this month compared to a year ago, but still much higher numbers than we had back in 2020. And what that means, by the way, is that we need fewer cows to get the same components. When we look at cow numbers and we say, well, they're down just a little bit, but actually our pounds of fat and protein might actually be up a little bit because of these component changes. So if we look at the class 3 price, it was $17.78. It's been coming down off of that 25, so it's been quite a ride down. Right now, it has a little bit of a peak here in April, but that April number is actually softening a little bit. These were today's closes, but it has a little bit of pressure on it. And if we look at what happened in class 3, that cheese price is what brought that down $1.50. So we need to look at cheese price a little bit to see what happened. So this is the spot cheese price. Each dot is a day. And so when we priced February milk, that was back in here somewhere. So we were clearly on this downward trend. And that's what drove that class 3 price down. You can see where we'd gone up, hit this resistance line, and then been down ever since. Now in April, we'll talk about what happened here because we had just a big run up on the CME prices for a few days, and then we've lost over $1.50 the last 3 or 4 days. And there's a pretty good explanation as to why that happened. If we look at protein prices, we were $2.37 off of the $1.88 that we had back in September, and down from the $3.87 that we had back last spring. It looks like it's going to come up a little bit again. That's that April bump, and then settle back out in that $2.70 number. And if we look at these futures contracts, we're going to be below $3, I think, all the way through it. I'm not even sure that April number will be $3 when we're actually done. Way off of the highs that we'd had, and a little bit off of the lows, but we're going to have, a peak somewhere around October probably, and then dropping back off. Fat prices are pretty well at the low. They're at 272. They came off this 366. Back here, butter was, just outrageously high, and now that's come down and brought down this, and it's been kind of hanging at that 273 here for the next few months. And this is the futures contracts in this format with the lows in here. Class 4 came down to 1886, and that's the low off of this 2583. And if we look at what drove that down, it was non-fat dry milk. And so that took down 95 cents. And these are probably going to soften up just a little bit. We could be in the 17s here in a couple months for class 4. So here is this non-fat dry milk spot market. So the blue line is the global dairy trade, and we really tend to be about 20 cents below that. And these little lines down here are 20 cents. And you can see that it's just really been on a downward trend. And right now we're about 13 cents below the global dairy trade. But until we get this coming up, probably non-fat dry milk won't come back to the numbers that we had back here in last spring. So we're talking about global dairy trade. Let's look at what happened on the last one. It was March 21st last week, down 2.6%. And really, since about November, session over sessions have been down. Yeah, there was one up, but by and large, it's been down. And so what I like to do is put this back into U.S. prices. And so this is the current session. So butter on the world market's 211. Our spot's 238, the weekly average as of today, and so we're not going to be selling butter on the world market. The world price for cheddar is $1.84. You usually look at that relative to blocks. Our block price is $2, so again, we're not going to participate in that very much. Non-fat dry milk is $1.28. We're at $1.15, so we're kind of in the ballpark, but we're on the higher end of that 20 cents, so it's going to be a little bit there. But the thing to always keep in mind that whole milk powder is $1.47, which means that the world price for whole milk powder is $14.66, and we're just not going to participate in that very much. When you put the world price on our blend, we're about $17.79. So again, that's not a very good number. So I don't think the U.S. is going to be participating in this global market here to any great extent. The other thing that everybody's kind of all nervous about is slaughter data. So here's the most recent slaughter data that's actually fresh of this afternoon, about 65,000 for the week of the 18th of March. So the issue is ever since January, we've been having a higher slaughter rate than we were, a while ago. So I like to put these into a cull rate. And so I've got this box from 32 to 34%, and then I use the cow numbers that the USDA gives us each month. So we've been calling, more around 36, 37, 38, and it's coming back down, almost back in the box at this point. And the theory behind this is if we end up adding about another 7% deads, that's going to give us a turnover rate just right around 40% plus or minus one. And that's where I'm seeing a lot of herds able to be fairly stable. They're not growing significantly. They're not shrinking in size. The thing to keep in mind about the slaughter data is it's been very regional. So here's your region with Michigan in it. And you're up a little bit. So we go back to when we had just, 60,000. You're at 15.4. So you're up from that 13.8 a little bit in that region. But that's all the way across Illinois, Indiana, Michigan, Minnesota, Ohio, and Wisconsin. And what we want to be keeping an eye on is Region 9 because it's got California in it. And we keep hearing that these floods are just going to end up with a lot of cows being slaughtered, and right now that's not the case. They're right at about 16,000. They were 15.1 back in December, and so they're not way out of line anymore. They've actually come back. They were high for a little while, but nothing outrageous. And then the other one that we need to keep an eye on is Oregon, Washington, because it's always been about 1.2 higher than back here in December, so they're killing about another 1,000 cows a week from where they were. But that's 65,000, and so a lot of the areas, like the area that I'm in New York, most of our animals go to Pennsylvania. We're actually down a little bit, and so right now it doesn't look like a global slaughter scenario, but more regions 5, 6, and maybe 9 and 10, just a little bit. So let's look at what some of the USDA data is telling us about what the industry is doing. So these are cow numbers. So this last month we ended up with 9,417,000. Again, year-over-year numbers are just ridiculous because a year ago we're 9,380,000, and then so everybody gets all jazzed up about the fact we're higher in cow numbers. But this valley was not sustainable, nor there was this peak. And so doing year-over-year numbers when you got that kind of variability just doesn't come in. And so right now, my feeling is we're going to stick in this 9.4 million cows plus or minus a little bit. Again, USDA can't really measure cows plus or minus about 10,000. So they're going to bobble around here a little bit just because of random air. But I think we're right in this range, being fairly stable. And the only other time we were stable was back here because we've been up, down, up. So this is one of the longer periods that we've had some stability in cow numbers. Milk per cow is just on a nice 1% annual growth rate. This is the plot of the USDA data, and again, the red dots are February, so you can just kind of see the regression across each February. And this February came in pretty close to trend line. It was maybe just a half of a pound low or something like that, but it came in seasonally about where we expected it to. And we expected, production to come up in February. And so when that happened, that's just the way it's supposed to be. And then we're going to have our spring flush here for another month or so, and then we'll trail back down. So this data is slightly old because I can't recalculate this until we get the dairy products report this next week. But what I try to calculate is a rolling cheese disappearance. It's calculated the same way as your rolling herd average. So it's 12 months. You move forward by dropping one and adding another one. But if we look at these last 12 months, the cheese disappearance has been right in line with the supply of cheese. And I can do some back calculation that the rolling demand for cheese is about 38 million pounds a day. And we know that we make about 6.1 pounds of cheese per 100 pounds of milk. And you can do these calculations through, and it comes up with we need 9.419 million cows. And that is right on spot as to where we are with the USDA cow numbers. So for my book, cheese demand and cheese disappearance is right about as perfect as we can get. Right now, we've got a stocks-to-use ratio of about 37 days. That's been as high as 38.5, but right now about 37 extra days of cheese. One of the ways to get an estimate of demand is look at cheese stocks, because if we're getting the right amount of demand, are we holding the cheese stocks in balance? And we actually are for the last couple months. We were clear up to 1.5 billion, and it's come off from where we were. Now there's some rumors that cold storage is actually getting short in some places, but I don't know if that's more regional. I mean, if at one point we had 1.5 billion pounds in cheese, and now we're 1.4 and change, it would seem like we've got plenty of room left, but I'm hearing those rumors a little bit. One of the things to keep in mind that the cheese plants are going to be a little more reluctant to put cheese in cold storage with interest rates of where they are. Because again, back in here, we had very cheap money and no problem putting cheese in storage. The carry cost was pretty small. But now when we're pushing 6% interest on some of these loans, it's going to have a higher carrying cost. And so I can kind of expect these cheese stocks to come down a little bit. The one that's really hard to get a handle on is butter stocks, so they're very, very seasonal. So again, I've heard several people comment that butter stocks came up this last month. What's going on? Well, in fact, what I argue is just normal variability that fits in here. And these red dots are the Februaries, and so it's coming right back to where we need to be. And if anything, I'm going to argue that butter stocks are off from where they are typically. All right, let's just kind of look at the other side of the balance sheet, which is the grains. And so I left the table that I put in for you last month and can compare it to what we had as of last Friday. Again, these are Friday closes. But if you look at, for example, soybean meal, we were for the next 12 months looking at 442, staring down that barrel of pretty high soybean prices. That's come down now to 416. Now part of that is we dropped off March and picked up March a year from now, and so that helped. And corn was looking at 227, and now we're at 210, so very good. And we've dropped from 268 to 251, what I call my protein energy index. It's 8 pounds of cornmeal, 8 pounds of soybean meal. But at the same time, on our blend price, we went from 1927 to 1904, so we dropped 23 cents off of that. When we get all done, our dairy margin was, pretty similar, 1273. So let's just plot these out a little bit. So here's our rolling 12-month average of corn. I've got that red box at a 220, 240 trading range. We're clearly out of that at this point, and tomorrow is the prospective planting numbers, and so I could really rock the industry after that number comes out. Soybean meal was very high. It came up here on that EPA statement that they weren't going to really be supporting biofuels like everybody thought they were, but they've really come back down into this channel now, which is between 390 and 430. So here is the graph of the dairy blend. So back here in it's midsummer of 2022, we were pushing 24 pretty hard, and now we're pushing 20. So we pulled that $4 off that we saw before. And if we look at the dairy margins, we were at 16.50. Now we're around 13. So really about three and a half of that. So that has been made up a little bit by grains coming down and helping that dairy margin, but definitely a lot of pressure on this dairy margin number. And again, this is nothing more than the blend milk price with 8 pounds of cornmeal, 8 pounds of soybean meal. So this doesn't include all the other stuff that goes into making milk. Just a quick comment about weather. We know that La Nina is gone. Now we're getting into an El Nino, but the really big thing I think that everybody should start keeping an eye on is this cold water off the west coast. And the reason is this significantly impacts the jet stream. And so if this stays cold into the summer here, we're going to get a jet stream that does a little bit of this and end up with a drought, in these areas, including Michigan. But if that cold water will kind of dissipate, then we get a jet stream that kind of comes across the nation. And so that gives much more precipitation and a much better growing season. So keep an eye on this cold water off the west coast of Alaska and Canada there. Just kind of finish up here. This is the July home heating oil, which is a low sulfur diesel. I'd commented that some people were saying this is going to run up to $4. It sure doesn't look like that at this point. I drew this channel, and we're off of the channel a little bit at 250, but is definitely off of these highs that we'd seen, and we're basically between that trading range of 240 and 285. Now it all depends as to what happens, with crude oil, but right now, this looks like it's on a downward channel. All right, that's it for me, and I look forward to visiting with you guys in April on some more of the stuff here, and I hope you bring a bunch of questions because I love to be challenged on anything that I'm presenting to you.